Hi everyone, it's Justin Love here, your realtor over at Value Plus 3% Realty here in Vernon, the Okanagan. Sorry, it's been a while, but I'm back. Why was I away? Well, it's just got so busy. It was super busy out there, just to put it bluntly. I do try to stay very consistent, but there are times when just the business right in front of you takes up all your attention. So anyways, I'm back. With some good news. So as I was reporting in the last few videos, the market continued to pace, getting busier. So again, downward means busier because we're getting below the 6-month line. So right now we're at 4.8 months supply. 4.8, that's incredible. So we are now below the heavily below the 6-month mark. We were not at this point at the same time last year, although last year we had an on-time market. This year it seems like the market was delayed due to COVID. So yeah, there's 412 homes on the market, 112 popped up in the last 30 days, 85 sold in the last 30 days. This is as of Monday. And of the 85 that sold, the average time to sell was 82 days. So now the time on market, I've noticed that's been creeping up from about 60 days. Not quite sure why that is, but I think with some home sellers, they've just been holding on to their price and now they're being rewarded. And again, so 4.8 months supply. The other interesting and good bit of news is the OMREB monthly stats. So the stats for June came out recently. And again, you go to the OMREB website and you can go check it all out. But it did show what I was thinking was going to happen. Actually showed better than what I thought was going to happen. Was when you look at the average price of a home in the North Okanagan compared to last year, year to date, we are now 1.92% higher. If you look at the median, it says 4.58, so it's even better. But I like to stay conservative, so at least by a couple percentage points. The home prices have gone up. So we were before down by 1% or so. Now we're up. And again, when I'm charting out the absorption rate, we peaked at 14 months supply, and as quickly as it went up, it's been a steep drop down. So we've had a lot of activity just every single week, more houses on the market and more selling. And so compared to last week, we kind of dipped, I shouldn't say dipped, it's just in parallel. So we might start to see a slowdown a little bit because again, springtime normally it gets busy, and then as we get into summer, it starts to slow down a little bit because everyone's on vacation. Now, we won't necessarily be on vacation. Myself, my family, we typically go to Seattle around this time of year. I got folks down there. Not going there this year. And then typically sometime in October, we go to Japan. Not going there this year. So it'll be interesting to see how that impacts sales for the summer. Again, we are delayed. I'm very happy with everything I've been seeing. But to also be cautious, we could be in the eye of the storm, so to speak. There are outbreaks, second waves of COVID in different parts of the world in the U.S. So I'm not. I don't have the hubris to say it's not going to happen here. We're safe. Anything can happen. I'm cautiously optimistic, but this is a good sign. And even if we do get a second wave, then hopefully the pattern repeats, and whatever activity we're supposed to have, we'll try to catch back up. Things typically do slow down in winter, but again, that's a few months down the road. As we've seen, it's anyone's ball game, so I can't even really safely speculate as to what will happen in the months to come. But for right now, certainly, it's very active out there. Home sellers are starting to be rewarded for holding on to their original purchase price. But some still were a little bit high, and they've been making those price reductions, and they're starting to see the results for it. So that is the thing right now, is if you did have the wrong price as a seller, you make that price reduction, you should see fairly quickly the results of those actions. You should see more people coming in and hopefully giving you those offers if you've got the right price reduction. Buyers, I do notice a lot more competition happening. I shouldn't say a lot more, but it is happening more frequently where there's more than one buyer for a property at a time. I am starting to see buyers wanting to compete for property, whereas before it was like, nah, we'll go to the next thing. I'm not going to do this game. Yeah, I was in competition, or was going to be potentially in competition earlier this week. My buyers backed out. And then I had one recently where I had a buyer over the weekend. We put in an offer, And then it was supposed to be in competition. Luckily, the second offer didn't materialize. My buyer stuck with it though. They didn't just drop out at the first sign of competition. And I've had others where yes, they're having competition and we won or we lost. But yeah, so that's what we're seeing so far. It is active out there. It is busy. And again, to address the CMHC rule changes, it's not the end of the world. I talked to a good buddy of mine, Daryl Alefson at Monument Mortgages. And again, this is what I got from him, but anything I get wrong, it's on me, not on him, because he knows what he's talking about. So again, I've heard this from several people. Do I need to put 20% down now all of a sudden? No 20% down. 20% down is if you didn't want to have mortgage insurance. And that's for CMHC or Genworth, Canada Guarantee. So if you don't want mortgage insurance, then it's 20% down. It's still, 5% down for a home, but what CMHC has done is increased their minimum credit scores. They've gone a little bit more stern on their debt servicing ratio, so that's the financial calculations. And when it comes to non-traditional sources of down payment, what they're saying is you gotta have skin in the game, no real loans. So if you have a line of credit from home equity in one of your properties, that's backed by value, that's backed by equity. So yes, you can use that as a down payment, but if it's like your credit card or something, no, that's not gonna work. What was the other thing? There's one other thing. Oh, the other thing though is the other mortgage insurance companies, they're not changing their rules. So there's still Genworth, there's still Canada Guarantee. Last I heard, they have not changed the rules at all. So your lender does have choices typically. So as long as your lender has access to Genworth or Canada Guarantee, they don't have to use CMHC if that isn't going to work for you, and they're still happy to use those mortgage insurers. There are some credit unions and banks or lenders and whatnot, they don't necessarily have access to non-CMHC mortgage insurers. So it's case by case, but it's not the end of the world. If you were thinking all of a sudden you're magically disqualified, please go talk to your bank or your mortgage broker. That's not necessarily the case. It's not always the end of the world. I always say, get the facts. I know it's scary. Even with me with financing, it's scary to hear, oh, your credit score is not good enough or your income's not good enough. It's scary. No one wants to be rejected, but you got to get the facts, even though it's scary. And usually it's not as bad as you think. So, okay, that's what I have thus far. It's great to be back. I want to get back to making this regularly every single Monday or Tuesday, depending on how the start of the week goes. But yeah, any questions, absolutely let me know. Put your questions, comments. Please subscribe if you like the video, and also sign up for so you can be notified whenever there's a new video that drops. All right, thanks. Have a good one.